Raoul Paul is an ex-hedge fund manager and has been a cryptocurrency bull, especially around Ethereum, for many, many years now. Recently, he did an interview which he gave his thoughts around what he thinks is going to happen for the cryptocurrency space over the next couple years. We're going to watch together a couple clips from the interview that I thought was interesting, and then I will give you guys my 2 cents on the whole thing. Remember guys, like these videos, make sure to subscribe to my channel. I would greatly appreciate your time. Also, my Discord is running a 2-week free trial. All you got to do is check out the link in the description below.
So my take has been everything's quiet right now. You know, we've got very little liquidity coming into the crypto market or the traditional markets. You know, we've got the central bank still tightening, so there's just less money around. So even you've seen that the positive narratives, and there's been a lot of positive news in crypto, hasn't really driven price. Because the other thing is, we're not bringing many new people in yet. And there's a lot of supply on the market from, you know, Mt. Gox, government stuff, FTX, and that just weighs on the market when there's no new people coming in. We're seeing it in traditional markets as well. There's just not a lot going on. It's kind of very summer feeling about it, drifting around, not that many people participating. You know, you can see it on Twitter, you can see it in other places. Just engagement in the space is pretty low, but people have forgotten the space is up 50 to 100% this year. You know, it's very quick to forget in crypto, unless it's up 300%, we don't care. You know, so you have to take it, you know, crypto is still the best performing asset class in the world this year, but we kind of feel miserable about it because it's gone sideways or down since April, let's say. So overall, my view is that the central bank is likely to start to see inflation falling and unemployment rising and economic growth slowing or staying slow. And so that means for the back end of the year, the more likely outcome is they stop raising rates. Okay, that's plus point number 1. B, if the bond yields keep rising as they've been doing, they'll probably stop quantitative tightening at some point. That'll be a plus number 2. And then if inflation starts falling below 2%, which I think it will do towards the end of the year, they'll cut rates as well. So that's plus point number 3. So that shifts the kind of liquidity cycle as it brings us into 2024. Now, 2024 is not only will we see, so all of my forward-looking stuff about inflation and unemployment, rents, those kind of things, they should continue to come lower. So that means the central bank now has the excuse to cut because they need to refinance all of this debt that they've got, and there's trillions of this stuff, and they can't refinance it at 5.5%. Just it's mathematically impossible almost. So really, what I think they're trying to do is make it so they overshoot to the downside, so then they can cut and do the necessary things. Also, 2024 is an interesting year because it's an election year, so we tend to get more stimulus, whether it's, you know, government handing out money. There tends to be more money around to bribe voters. So I'm very positive on the last quarter of this year. I think it'll be volatile, let's say until October, and then we should have a good run going through. And then I'm very positive on 2024. Now, none of these things will go in a straight line, but generally the first year of crypto spring looks like this. It goes up a reasonable amount, but it's choppy and sloppy and people don't really buy into the story. Then the next year of crypto is when spring turns into summer. We tend to have a good year, not ridiculous year, but a good year. And then the year after that, we tend to have a ridiculously good year. So that's generally how things have played out. I think that's based on a macro cycle. I think that's how it's going to play out this time.
So Raoul Paul talks about the lack of liquidity and engagement in the space. And from my experience being a part of the last bull run and the last bear market in 2016 throughout 2018, attention around cryptocurrency was at an all-time low. Nobody gave a crap about any news or narratives. The vast majority of people had completely checked out of the space. And I think right about now during this, you know, lull of prices, even though we have some excitement recently, we are seeing very much the same. If you take into account a low amount of attention on cryptocurrency whatsoever, as well as a lack of liquidity and new participants in the ecosystem, and then you also couple that with the fact about FTX and Mt. Gox and all of the selling pressure that those tokens put on the entire market, we can start to get a decent sense as to why cryptocurrency prices have depreciated as much as they have. Raoul also goes on to say that cryptocurrency cryptocurrency, specifically Bitcoin, is still the best performing asset of the year. And this is true. If you look at the data, Bitcoin is by far one of the best, if not the best performing asset of 2023. And obviously, like Raoul says, this is extremely easy to forget. When we went from about a $70,000 Bitcoin to around the $28,000 Bitcoin we have now, that still doesn't mean that we saw great gains if you were buying at the start of the year.
I don't know. I'm so scarred from trying to give outlooks, and then it becomes this obsession that people want to beat you with. So look, I'm very positive. Obviously, I think we go well through new all-time highs. I think the whole ecosystem of crypto, we go from 425 million users where we are today. I think the end of this cycle will be 1 billion users by the kind of use cases we've talked about. Don't forget, we've got CBDCs, stable coins. There's a lot going on still. So if the entire space is going to grow 2.5x in number of users, well, market cap of the entire space is 5 or 10x. So you can figure it out from where that is. So yeah, look, I'm just very positive. And then let's see how people value layer twos in this. We don't really know how value twos accrue as much value. Do we have to have a massive amount of transactions? In which case, then you need stuff like Ticketmaster with millions and millions and millions of transactions to drive value to those chains, because they batch them and then batch them down to ETH. So look, it's super fascinating. But yeah, I don't see anything different this cycle than we've seen in other cycles for any particular reason.
In this last clip, Raoul talks about the fact that he could see the overall participant number of the cryptocurrency ecosystem do some sort of a 2 or 3x, so a ton of new participants into our ecosystem and just a ton more liquidity because people come in and they have money they either want to spend or invest. He also goes on to say that the fact that we could see a 2 or 3x of participants could very well mean that the entire market cap of the cryptocurrency sector could see some sort of 3 to 5x, which would mean that the total market cap of all cryptocurrencies in total would go from about 1 trillion to about 3 to 5 trillion. And obviously, if that is the case and that does become true, a lot of money will flow into Bitcoin and Ethereum and solidified altcoins. We could also very well see some of that money flow into smaller caps like gaming coins, like different NFTs, and all of those more risky assets that people are potentially looking to multiply their money on. And so in general, Raoul is extremely bullish on the back half of 2024 and specifically in 2025. And he cites a lot of the same reasons that I have been talking about on this channel for many months now, which is the Bitcoin halving is going to take place, the presidential election, potentially lower interest rates by those dates, and the potential from going to QT to QE, which would just mean there's more liquidity and money for the entire market, aka asset prices go up. And if you take a step back and, these 3 to 4 large factors, I think, are going to play a large role in this upcoming cycle, but we do have to take into consideration the overall macro of the entire world, where we have war and we have different conflicts and we have the potential weakening of the US dollar. These are all things that we need to take into consideration. Therefore, I still preach that the DCA strategy is going to be the best strategy because A, we don't know if the bottom that we saw during the FTX collapse was the actual bottom. We don't know if $28,000 Bitcoin is going to be where we're going to stay. We could very well continue lower, especially for altcoins. But what we have seen is money going from altcoins into Bitcoin, which is why the Bitcoin dominance chart is going up and up. And that basically means that money is fleeing into the least risky cryptocurrencies like Bitcoin, like Ethereum. And as you can see, if we take a look at the Bitcoin and ETH pairing, ETH is slowly losing value to Bitcoin as well. So money is also flowing from Ethereum into Bitcoin at the moment as well. We have to take all of that into consideration, especially if you think about a potential Bitcoin ETF coming in 2024 or 2025. Bitcoin may very well be where a lot of the money heads heads to, at least in the short to medium term. I hope you guys enjoyed this video. Make sure to take your time when it comes to investing in cryptocurrency. Everybody wants to get rich overnight, but in general, from what I've seen and my personal experience, if you want to make the most money in cryptocurrency, you need to dollar cost average over time during very depressing, slow market periods, and then slowly take profits during the next phase, during the next bull run. I still think that is the easiest way to do it and the least stressful way to do it. I hope you guys enjoyed this video, and I will see you guys in the very next one. Peace.